Questions and any other financial topics that my subscribers want to talk about. Okay, this lesson is about covered calls and cash secure puts. We're going to do an example with Alibaba as part of our Alibaba series where I do screen prints and explain what I'm thinking every week as I'm doing covered calls in my portfolio. How do I set up the call? How do I buy the call or the puts, and how do I execute the trades, and what am I thinking each day as I'm getting closer to the expiration date. So welcome to Trading with Rich, where I deal with financial planning, investing, and insurance. And this is not meant to be financial advice, but I actually like to talk about all these different topics. And the goal of my channel is just to get to know you, and hopefully we can meet someday in the future and talk more about your financial aspirations and how I might be able to help you. A disclaimer: this is not meant to be financial advice. Please do your due diligence when it comes to research and consult a financial advisor or a tax professional. Now, what is this video that I'm about to show you? Well, this is a 2-week example of executing covered calls and cash secure puts in a live example from my portfolio. I screen printed live trading platform shots from my broker, Tastyworks, out of Chicago. And by the way, they are a great online broker. I've been with them for over 3 years, going on 4. The price of Alibaba just happened to start at 86.05 and end 2 weeks later at 86.36. We did this study between 12/2 to 12/15, 2022. So overall, this was kind of like the perfect storm. It really worked out well. I hope you enjoy the video, but this made for a great example on how to earn money by renting out your stock for 2 weeks. The price fluctuated up to 94.25 and down to 86.05. The S&P 500 during this time period, which I use the index SPY, which most people in America use, went from 404 on 12/2 down to 389.63 on 12/15/22. The market has been terrible lately. Everything's crashing. A lot of stocks are down 50 to 70%. So this is a good way to make up some money on your portfolio by actually just renting out your stocks every week. The SPY is down 17.9% this year as of 12/15/22. I'm going to show you how to offset these losses by making money every week with covered calls. This volatility gave me an opportunity to show you how to hit a double and even further advance the profits by 30%. This was a very profitable 2-week cycle, and in no way am I saying that you'll duplicate these results. I started out looking like I'll make $1,740 on an $87,000 investment, and I ended up making $2,448 in 2 weeks. So all I'm attesting to is that these are real screenshots. This is not made up. This is not Photoshop. I made this video to explain what I was thinking while setting up the calls and puts and exiting the positions. The numbers don't matter as much as the mindset that you're going through when you're setting up your calls and when you're trying to execute the calls by looking at what's going on during those 2 weeks and then exiting at the proper time. So I'm going to explain that in each one of these videos. I'm going to explain that in each one of these slides, kind of give you an idea of what I was thinking about each day, especially during the second week of the cycle. It takes about 6 to 12 months to get comfortable with trades, and probably even longer to get comfortable with options. So I recommend you start with covered calls. You have to have the risk tolerance to withstand the volatility of the turbulent markets. If you're going to jump out the moment that something drops 5-6%, then you're not going to do very well. Not only in the stock market, but you're probably not going to do very well with covered calls because you'll constantly be buying back your obligation at a loss. There's a time value built inside there, and you need to wait till the end of the time period when you've set the expiration date And if you do that, you'll see, as in my examples, that you can buy yourself out at a pretty reasonable cost, or just let it go ahead and go all the way to expiration and not pay anything to get out of the contract. So covered calls are a conservative method to rent out your stocks for a period of time and at a price that you pick. It's just like the housing market. Your stock price could go down or it could go up. This strategy is considered conservative for long-term investors. So what did we do in this 2-week period? Well, first of all, the initial premium credits that we earned on September 2nd, the initial premium credits on December 2nd was $1,745. I was looking at buying out my obligation at 50%, and I'll explain that more as we go through the slides. But kind of looking for 50% profit, then jump back out, or at least start considering to jump back out. I usually don't ever jump out of a covered call until it's at least made 85–90%. But the going philosophy is start looking at it at 50, and if you think that the market's becoming too volatile with your stock, then maybe it's time to go ahead and buy yourself out. But anyway, in the second week, we kind of hope that we might be able to buy ourselves out and then buy back in again for a higher premium. And I did that on 2 sets of contracts. And you'll see that in these slides. I aim for 80% profit and a 1% return on investment. So I'm aiming for about 24% annualized with 4 earning weeks taken out of the year. So there's earnings 4 times a year. And during that week, I go down to a 1-week cycle instead of a 2-week cycle. I don't want to have any covered calls on the stock right there when the earnings are, fluctuating quite a bit. So in this example, the BABA price was $86.05 on December 2nd. It finished at $86.36 on December 16th. Now in between, it fluctuated a lot. And when it got up to $94 and started dropping, that's when I was able to go ahead and buy myself out of the obligation when it did drop and reset the covered call so that I could make more money. So what actually happened? Well, we put a put out there with a target price of 85, and we collected $240 in credits. And at the end, and it really wasn't until about December 15th that I went ahead and bought it back and got out of the program. But I bought it on December 2nd and offered the put to the trader on the other side of the desk, and they took it, and I made $240. I only paid $20 to get out of the obligation. So in the end, I made about $220. On the $95 call, I kind of let that roll all the way through, and you'll see at the on the slide towards the end of this presentation that I did buy that back at the end, and I'll put that in the spreadsheet that shows the final numbers. Then we had a $100 target price. We made $1,062. That was put into our checking account on December 2nd, and we had the obligation to sell that stock at $100 at any time during the time period. If it had gone to 105, I would have had to sell for 100. Then we had another set of calls at 105, and we made $648. Now, on both of those calls, the 100 and the 105, I had 6 contracts on both of those. And then on the 95, I just had 1. So I ended up buying myself out of those 2 calls at $240 and $90. And then I moved those to a 96 and 97, and I will show you that. So when I initially started out, it was $2,095 that I was going to collect. But by the time we got to the end, how did I do on these particular calls that we set up on December 2nd? Well, I paid back $350, so I made $1,745. So now I'm going to show you some screen prints, what I was thinking during the time that we were watching these cover calls and seeing what we should do with them. So the first one was on December 12th. Excuse my fingerprinting there, but there's no way to type it in when I'm on my platform. So I just used my finger and drew out the date. So on 12/12 of 22, the stock had jumped up to $90.45. Now I have 1,000 shares that I just own outright, and the cost on those are $80.604. And at that time, the net liquidity, if I wanted to sell them, was $90,000. So you're looking at about $9,600 in profit at that point. So I got something to work with for my covered calls. I put a put out there, and I paid, and I sold a put at $85 and said that I would buy the stock at $85. I'd buy 5 sets of them, which would be 500 shares at $85. But I put insurance behind it of $715 and said, well, the lowest I'm going to go is 83. So I bought an 83 put. You'll have to watch my videos. I'll explain how you buy and sell puts. But this is just to show you, this video is to show you how to actually work the portfolio. And we've come up with a final number at the end. Now right now we're at 1,740, and I'll show you how we got up a little higher than that. So that's $240. $955 from $715, that's $240. That's my opportunity. Now already, to get myself out of this thing, I would have had to pay when you look at this, the difference between the two is what, $180. I would have had to pay $180 to get out of it on September 12th. On September 12th, I would have had to pay $149 to get out of the $95 call. I made $145, but I would have had to pay $149 to get out of it. On the $100 call, which I have 6 contracts, which is 6 times 100, 600 shares, I was credited for $1,062 into my account, and for me to get out of it on the 12th, it would have cost me $378. The final one is 6 contracts at 105. I made $648. There's less risk going to 105 than there is going to 100, and thus, if I wanted to get out of it, I could have got out of it for 162, because the other side of the desk is thinking, I don't think we're going to get to 105 because it's already been a week, almost 10 days after the weekend, and we're only sitting at $90. Don't think it's going to get to 105. So that's why this is evaporating quicker than this one is. And then these are my synthetic stocks. They're leaps. And this one's good for 557 days. This one's good for 767 days, and so is this one. I agree to buy these stocks on those dates for $100 or $120. If it hasn't made it to that by that time, then they'll become worthless. So how do I cover the 2850? By doing covered calls. So on each contract here, I'm trying to make about $100 every 2 weeks, and that way I can cover the 2850 in a matter of 28 weeks. And I've got over 2 years to keep this stock. So that's how a leap works. Again, on 12/12, we're looking here at 10:40 in the morning. We're just looking to see, well, how much profit have we made so far? We bought these on the 2nd. Right now, on the put, we're up about $55, and on the 95 call, we're up $9. On the $100 call, we're up $708, and on the 105 call, we're up $504. So everything's looking pretty good. We're heading in the right direction. Again, on 5/12, I'm looking over here and saying, hey, on December 12th here, on the 105, I could actually get out of this for a pretty good price. I could buy back my obligation for $90 and give $90 to the other trader on the other side of the desk and tell them that, I think I'm going to end up keeping your whole $648 you gave me, because I don't think it's going to get to 105. But if you want to buy me out here on Monday, I'll give you $90 back, and you let me out of the obligation. That way I can go do something else with my stock. So I'm starting to look at that. Now I'm looking at the 100, and I could buy that back for $240, so that's like 25% of the total. This one entices me more than this one does. But you'll notice later I went ahead and made a move on this one later. And I didn't make a move on this one at all. I just let it go to expiration. So again, on the 12th, I'm looking at going ahead and taking the 105, and I paid him $90, and thus, instead of $648, I made $558 on that. It's done. Hands are clean. We've wiped our hands clean. We now have full access to those 6. So I went back in and I sold the 97 call. Now what I did is I made it all in one transaction, so they took the $90 out. I was going to make $480, but I went ahead and paid the 90 back to them, and I had leftover 391. So at that moment, it said, well, if you want to buy back your obligation, it'll cost you 390. So what does that mean? That means I just made this trade. I screen printed this right when I made the trade, just so you could see that, you know, I got deposited $391. Remember, originally this was the 105, which was, you know, the 105 call, which was a 648. After the $90 payback, I ended up keeping $391. So now it's $391 plus $648. So now I'm over $1,000 for this covered call in the same period of time. That's called hitting a double. If you can do it a third time, that's called hitting a triple. Usually, to hit a triple, you've got to have like a 30-day covered call to make this work right. A 2-week covered call, it's even hard to hit a double, but we hit 2 of them this week. So we hit this one. We took the 105 and took it down to 97 because the stock had dropped to 89. So once again, I'm looking at making making $300 if I do the $100 call, buy back my obligation, and move it down to say 96. I could end up with an extra $300. I didn't do that on 12/12. I went ahead and let it stay. I was going to make $48 a contract, and $48. This says 48 cents a share, but there's 100 shares in every contract. So I was going to make $48. You know, times 6. You know, make $300. But I didn't do it. So now we're still looking at, now we're on the 13th, and I'm looking at, oh, price went up, 92.88. That's good. When the price goes up, that means you're farther away from the put. So now where do I sit? Well, I originally, you know, I got the $240 there. How much would it cost me to get out of it? It would cost me about $60. So at this point, no, I'm not going to get out of it yet because it's only the 13th, which is Tuesday. I'm going to let that ride. And then, you know, I covered this, the getting out and doing the 300. I didn't do that. Why? Because I go and I look and see what do I think, which way is this thing heading? One of the things I use is Yahoo Finance. It's free. There's plenty of financial tools out there to kind of watch your stocks, but this is the one I used. And Alibaba was at 89. Now it's at 92. Okay, well, it's heading on the way up, so it might be hard to hit a double. I don't want to get out of it because it's getting closer to, you know, the 97 that I just set, but I still have a set of 100s out there too. And of course I have the 1 at 95. But when I look at Alibaba and I look at the time period for this week, Saturday, Monday, Tuesday, Wednesday, Thursday, Friday, this thing's been bouncing around like a roller coaster. The high was 94.98, and that was in the middle of Tuesday and Wednesday, and it went all the way down to 86.05. But you know, it was about 87, 88, 89 most of the week. Then it jumped up, and then it came back down. Then it jumped up again, then it came back down. This is the volatility that I'm talking about that you got to be able to stomach. So on the 14th, I'm looking at the put. Well, I'm getting closer here. I'm $160 away, so I'm heading in the right direction. Why? Because the stock had gone, you know, had gone up quite a bit. So that made it farther away from the 85. And then I'm looking to see, well, how am I doing on my 95 and my 97? So far, profitable, $76. Remember, that was originally $145, so I still got a few more days to burn. And this one I reset on Monday to close out on Friday, and now it's worth 157. So, you know, I made the 550. Remember, it was 648 minus 90, and then I added 157. So now I'm over $700 for this one. And then the 960 here, the 100, I still haven't done anything with that yet. It's still at 100 on the price. It originally was 1,062. Now it's worth 960. So, you know, coming on pretty strong. So maybe I'll do something with this. Maybe. We'll see. I'll show you in a couple slides. So far, I'm up to about 1350, you know, by the 14th, which is Wednesday. So on the 14th, I'm taking a look at numbers, and I'm checking out how far apart I am, and you know, I remember what I originally bought. Now I know how much I can get out of it for. So I could do the 1536. I'm thinking to myself, if I do something with this 100, which is getting down to $100, it's only 10% of the total. Maybe I'll get out of this. So on the 15th, I decided to go ahead and take that 100 call, you know, which remember was $1,062. I decided to go ahead and buy myself out of it and put myself into a 96 because the stock was sitting right about $88. And you can kind of tell here, actually the stock was on 1,000 shares, it was at 90.9. And I thought, well, okay, I'm going to go ahead and buy in. I bought myself out for a small amount. We'll look at the spreadsheet and I'll show you exactly how much I bought myself out for. But I put another $384 back into my checking account. So now I got a whole new set. I got the original one that originally was 145. Then I got the 96, you know, that I had converted from the 100, and I've got the 97, which I converted from the 105. So these two I hit doubles on, and I added this and this. Now I'm trying to keep as much of it as I can. To get out of my obligation on the 15th, which was Thursday, it would have cost me $192 and $150. So making pretty good money here. Oh, that's funny. That's exactly half. Made 50% right there. And on this one, I actually made more. So now I'm looking to see, well, how much, you know, am I actually going to make at the end of the day? Well, look how much it dropped because the stock price went down to 87.82. We'll wait for the clock to quit beeping. So now we're looking at the end of the day. It went down to 87.82, and I'm able to get out of these. So I started putting orders in to go ahead and cancel out the whole, to go ahead and pay the $30, $36.08. Started putting orders in at like $2 for each one, so that'd be $12. I didn't pay $36 and $30. I paid a lot less, but I did pay the $8 and got out of this one because it was getting closer. It could bounce right up to it, and I said, just get out of it. Then it gives me the freedom to go do something else again. So that's what I did, and here's the results. I got out of the puts, ended up paying $20, and I got out of this $95 call. It cost me about $8. I got out of the 96. I didn't get out of the 97, and I got out of the 100. So, what happened? I know that was a lot of numbers, a lot of things. You know, you may want to, you know, go back and review those screen prints again for the whole week. But what happened? Well, let's review what happened over these 2 weeks. I had $87,539 in the cost of 1,000 stocks and 300 shares of Leafs. So that was 13 contracts of 100 shares. I targeted the 100 call. At the time, I was looking at the price of BABA, and I put it in the 80% out of the money. So there's an 80% chance it wouldn't have hit 100. So that's what I normally do. That's kind of my going rate. 80% is my target all the time. And sometimes if I'm not really comfortable, I'll go up to 90%. So I hit a double on the 100 price target because I rolled it to 96 on 12/12 and kept the same December 16th expiration. Now, I did put a 90% out of the money for the 105 price target. Now, remember there were 6 contracts on both of those. So I did this one later. I hit a double on the 105 price target. I rolled to 97 on 12/15 the day before, and as you can see, I think I made, what was it, $370, $390 with the same expiration date. Now, in this 2 weeks, BABA started at 86.05 and it finished at 86.36. Let's review what happened over these 2 weeks. Remember, we had 2 weeks worth of covered calls. We had 2 weeks worth of a cash secured put where we had 5 contracts. The put was set at an 85 target with 83 insurance. I paid back $382 to get out of the obligations and to roll 12 contracts with the same 12/16 expiration date. And remember, the BABA was 86.05 and we finished at 86. So here's the spreadsheet. At the top here, we had a target price on the put of 85. We had a credit of 240. We paid back 20. On the call, we had one of those, 95 was the price target, and the credits were 145. I got out of the obligation early and paid $8. Then we had the $100 call. That was 1,062. I paid back 240. I set that up on December 2nd. Now, we hit the double by moving it from 100 to 96 on December 15th. We got $384 to do that after we cleared out the $24 that we paid back. Then on the 105 call, which is not very much risk, it was 90% out of the money, we collected the $648 and we paid back the 90, which was, left us at $558, and then we added the 391, the 391 by moving it down to 97 price target. As you know, we finished below that on all of these. So for the subtotals, we collected a total of $2,870. We paid back $382. So our grand total profit was $2,488. So again, we had a 2-week covered call and a put from December 2nd to December 16th. We invested $87,539. We had a profit in 2 weeks of $2,488 with a return on investment for those 2 weeks of 2.8%. So I don't do covered calls during earnings weeks. So I only do 48 weeks of covered calls. So each earnings week, which there's 4, one each quarter, I just don't have any covered calls on my BABA stock. But I'll do a 1-week covered call and then jump out of it and watch and see what happens during earnings. I try to average about $1,200 every 2 weeks, which would earn me about $28,800 on an $87,000 investment. So annualized, that ROI would be 32.8. The actual was 68.1 with this example, which is why I put the disclaimer up front. Do not look at this like you could do this every 2 weeks. It just doesn't happen. This happened to be the perfect storm. I was able to do hit 2 sets of doubles with 12 sets of stocks, 6 on the 100 and 6 on the 105, and I lowered them down to 97 and 96, and that actually took me from the $1,700 range to the $2,488 range. So I made 30% more. I won't hit 40% for the year. I'm going to get close with BABA, but I'm not going to hit that. But this really helps when you hit a 68.1. And a lot of people say, "Oh, that number's way too high." Folks, these are actual numbers. This is what really happened. It's over now, and I'm reloading. If you follow my channel, you can see that I'm doing it every 2 weeks. And what I've been doing is growing I just leave the money in my account, and when I get enough cash, I just buy another set of 100 shares. So this was an actual live example. So what's the lesson in all this? You got to look at it as that money went into my checking account, and for those 1,300 shares, we started at $86.05, but we earned $2,488, which per share, that's 2.48 per share. So the shares are now 86.36 because the price went up just a tad, basically about 25 cents, 29 cents, plus the 248. So what I really have in there for a cost basis, or really how much it's worth, is 88.88. So if you keep doing that every 2 weeks, it doesn't take you long to get up over $100, even if the stock is still sitting at $86. So covered calls are a great way to offset any losses. It adds to the gains. You don't make any money off the stocks until you actually sell them, but you can make money every week by renting out your stocks. So if you'd like to contact me, my email is tradingwithrich@yahoo.com. My YouTube channel is youtube.com/@tradingwithrich77. And if you want to see my past experience over my career, I'm retired now, but it's at LinkedIn, and my name is Richard Dickey. Okay, it's now December 17th. This slide was written on the 17th here. We just finished the 2-week covered call and puts for December 2nd through December 16th. And now I'm going to show you how we're going to set ourselves up for the December 30th expiration date and what those calls and puts will be targeted at. So I'd prefer to sell this BABA stock here before the end of the year for tax purposes. I want to go ahead and take the gain in 2022, and that'll offset some of the losses I'm going to write off with some of my leaps that I got killed on. Leaps can be very dangerous. You're much better just to stay with covered calls on full stocks. But I do have 3 leaps on BABA because it was where I thought it was very low, and it's worked out really well. I've already paid for the cost of those leaps, so I'm okay with 3 leaps on BABA. But I have 10 full covered stocks. So the stock was at $90 when I set up my covered calls. It had actually been up to 91, and as it started to go down, I went ahead and thought that was the top for the day, and I set up my covered calls. So I set up 10 covered calls at $91 and 3, which were the synthetic stocks, at $95 because I plan on keeping the synthetic stocks, the leaps, and all these calls are going to expire on 12/30. Then I went in and set up 2-week cash secured puts. I did 10 contracts and 6 and 4. The stock was down to $86 when I set up the puts. I waited for about 4 hours because I thought the stock was going down. It went from 91 down to 86. So when it hit 86, I went ahead and set up the puts at 82 and 80, and it ended up being perfect timing. At the end of the day, you can always look back. You can be a 20/20 armchair quarterback and think you're doing right, but you really never know until you get to the end of the day, take a look and see how everything worked out. I did screen prints here so you can see throughout the day how I set myself up for the 12/30 expiration date on these calls and puts. So use the same basic philosophy. 80% out of the money is really about as risky as I want to get, because I normally don't want to to sell my stock. Now above, when the stock was at $90 and I sell it for 91, obviously that wasn't 80%. That was more like about 50 or 40%. But I wanted to sell the stock, and I figured it was going to go down a little bit because that's what it's been doing for the last couple of months, up and down. So I set it at 91, and that was kind of a magic number too, since my stock is cost averaged at $80.20. I thought, well, that'll give me a $10,000 gain on 1,000 shares of stock, $10 for each share. So on the puts, I did the 80%, which was 6 at 82, and then I did 90% with 4 at 80. Then I covered it with 10 insurance contracts at 76. So remember, the BABA price was 86.36 on 12/16. The gain plan, get it? It's a gain plan, not a game plan, but the gain plan is to sell it at $91 on 12/30 and keep the $4,200 of premiums from calls and puts that we set up on 12/16. So the stock appreciation is going to be about 10K, and the premiums in November and December They're going to be well over 10,000, but I'll just throw 10,000 out there. As with everything, the best laid plans of mice and men. We'll see. Stay tuned for updates. We're just on the last leg here of a 2-month journey to show you how to do covered calls and puts with using Alibaba out of my portfolio with screen prints. So let's take a look at the first screen print. First one we have here is when the stock was showing at $89. Now actually it was closer to 91 when I started to do the call, but it fell so fast before I was able to do the screen print. You can see that we already have some profit here. That doesn't normally happen. Normally you've got a few dollars over what you earned because they got a little bit of value in them. But I've already gone down, and you'll see in the next slide that it went down even more. So anyway, we earned and were credited for $3,000 for the 10 contracts, which were the full-fledged stocks at 91. And then we've got 3, which my synthetic stocks, my leaps, and we earned $540. So we had $3,546 put into our checking account that we could use. If I want to get myself out of the obligation, I could have got myself out for $29.80 and for $537. So already profitable, $3, and on this one about $26. And that was just a few seconds after I had done this. So the next slide shows that it went down even further towards the end of the day. And what happened is, that's our insurance on those puts. And then here's what we were credited for the puts. We haven't earned that yet because we've got to wait till December 30th to see how it all shakes out. But we paid $600 in insurance and we collected $1,106 in premiums. So it's actually $506 gain if we stay above $82 but before December 30th. Now look what happened when this stock went down to $86.79. We still got the $3,546 in the checking account, but we can buy ourselves out for $2,100 and $366. So what kind of gain is that? Well, here's the gain. This is the P&L open. The puts, kind of working themselves even. You got a 60 and a 60, and then a 0 because they're exactly the cost and the buyout are exactly the same. So that's pretty much even on the puts. But look what the gain is so far on this. Is like at 1:30 in the afternoon on Friday. I'd already gained $886 and $174 on the other call. So a total of $1,050 out of the $3,500 that I set for December 30th. So at this point I'm thinking maybe I sell out and buy a double, but I won't do that till Monday. We'll see if the stock starts to go up on Monday. We'll see what that gain is. But anyway, I'm shooting for the 3,500. As they say, pigs get fed and hogs get slaughtered. So I'm happy that I'm above, $1,000 on the earnings in less than a few hours. But I'm not really ready to go ahead and sell out this call, take the profit, and set up another call. But I may next week. I've got 2 weeks. Next week's Christmas, and then the week after that is New Year's. So some holidays here. They shouldn't move around too much, so we'll just stay with this. But this is the beginning slide also for our tracking of the Alibaba 1,300 shares between December 16th and December 30th. And remember, the game plan is we want to sell the 1,000 shares of BABA stock, and if it could get as close to or right on $91, that would be fantastic. Because even if it goes to $92, I'm gonna let it go for $91, but I'm gonna keep the whole $3,500 from the premiums on those calls, and then hopefully I make another $500 on the puts. Which puts, cash secured puts, that's a gamble. That's an option. I like doing them. I'm usually pretty good with it, but I'm really do not lose money on covered calls. If you miss a put and it goes down too low and it goes below your insurance, you could lose In this case, it would be 4 times what I made. Actually, it's 2.5 times. I can make $500, but I could lose $1,200. Hopefully it stays above 82. We'll see. Only time will tell. Again, thank you for tuning in to Trading with Rich. My handle at YouTube is at Trading with Rich 77. So if you want to give my handle to anybody, show them how you're following Trading with Rich and how we do covered calls and any other financial topics you'd like to talk about, just please hit the like button, subscribe, hit the notifications to see when I put out new material. Thank you, and we'll see you on the next video. Welcome to Trading with Rich. My channel is about financial planning your future, investing suggestions, and any other financial topics that my subscribers want to talk about.